There's a potential shakeup in the automotive market, and a lot of investors in Tesla are wondering if this will affect their future investment, as Tesla has a lot of things that are based on the future, right? The promises of robo-taxis, autonomous driving. So can this come in and derail their success? We're going to talk about that. Now, the merger is with Japanese giants Honda, Nissan, and Mitsubishi, and their plans are to merge into the world's third largest automaker. This merger is expected to be completed by August 2026. Now, earlier this year, Honda and Nissan also signed an agreement that focused on jointly developing electric vehicles and automotive software. Now, Nissan has been financially struggling. Nissan owns Infiniti, and they want to go through and combine some of these dealerships into one, so a Nissan and Infiniti dealership. But I think this will only diminish the perceived value and luxury of Infiniti, so not a good move. Nissan also said it will be doing layoffs, and the CEO took a 50% pay cut. Now, Honda, on the other end, they own Acura, which I think is one brand that is coming back, making a little bit of a comeback. And Honda overall is doing better than Nissan, but it's still seeing profits fall. I also see Acura as a more popular option than Infiniti, and many think this merger may cause the new holding company, if the merger goes through, to just get rid of Infiniti, that brand altogether. And then there's Mitsubishi, and this is one that may join the merger. They haven't officially announced it. They're going to make that decision next month. So that is to be seen. I think the three of them are essential for success. But with the changing automotive industry, this is how these three companies think they can survive and navigate it best. If it's not Mitsubishi in there, it's going to be a little tougher with Nissan and Honda only, but that still gets some strength between the two of them. Honda's CEO said, "At this time of change in the automobile industry, which is said to occur once every 100 years, we hope that Mitsubishi Motors' participation in the business integration discussions of Nissan and Honda will lead to further social change, and that we will be able to become a leading company in creating new value in mobility through business integration." So why is this merger happening? Well, Tesla and major Chinese EV companies are forcing this change in the car industry. We are seeing the electrification of the automotive industry, whether we like it or not. Will it last? Who knows? But as of now, that looks like the clear path we are rapidly headed towards. Now, 5 years ago, I knew virtually no one that owned an electric vehicle or even a hybrid. I did see them on the road, right? They're kind of increasing in popularity, but my own circle, I did not. Now I am seeing a lot of people in my circle buying EVs or hybrids more specifically. And the proof is that the company I work for, in their parking lot, anyone that buys a new vehicle is typically a hybrid. There are some EVs as well. And the same thing for my neighborhood. A lot of new cars I'm seeing in my neighborhood are hybrids or electric vehicles. I was talking to a neighbor that was walking his dog. He bought a hybrid truck and he really enjoys it. Now, I'm not seeing a pure electric vehicle play right now. It's mostly the hybrid, but that's showing the movement towards a fully electric vehicle market out there. Right now, people are dipping their toes in, mainly with the hybrids. So as I said, Chinese EV companies are forcing this change. China is winning in China and abroad. The emergence of Chinese automakers such as BYD and NIO has eroded the market share of global automakers such as Honda, Nissan, and Volkswagen in China, a country they once counted as a critical market. The Chinese automakers can not only make cars more cheaply, they also have won over the Chinese consumers with their electric vehicles and their nifty software. These Chinese upstarts are no longer content to becoming dominant at home. They are now focused on markets abroad, including key ones for Japanese automakers such as Europe, where Chinese automakers are grabbing market share pretty rapidly, and China is succeeding. The country has now overtaken Japan as the world's largest exporter. Now, Honda's CEO also said that the rise of Chinese automakers and new players has changed the car industry quite a lot, adding that the company needs to strengthen their offerings by 2030, otherwise will be beaten. So he's kind of admitting that they might not survive if they can't do this merger. They might be a car company of the past. Very interesting. This industry is changing so fast. Now, as far as Tesla, they are the leading EV company in the US and the main automotive company that can compete with the Chinese EV companies currently. I think we're seeing some strength here and there with some other car companies, but no one even close to Tesla right now. I think we see other mergers of automotive companies in the future because of this pressure from Tesla and the Chinese EV companies, and don't be surprised if we see some go completely out of business. Nissan, if this doesn't go through, for example, could be one. Plus, Honda and Nissan, they are not popular anymore like they once were. They're falling behind virtually every other car company. I don't see anyone buying the Hondas or Nissans for their new car purchase. Outside of Tesla, I'm seeing mainly Toyotas and Fords. That's what comes to mind when I go around the neighborhood or in the parking lot of my company. I'm seeing the Ford EV hybrid trucks. I'm seeing the Toyota EV RAV4s, stuff like that. Now, 10 years ago, people would have laughed at the idea of these three car companies merging, but that's why I always say that even in a very established industry, things can change, and they can change pretty fast over a year or a couple years. So never get comfortable with your investments. I hear investors say a lot that, no, this company or industry will never be disrupted. Well, we have seen some big upsets in the past, and that is a dangerous way to think with your money that you're wanting to grow into massive wealth. Now, let's look at it from a different perspective. I think car buying has become very boring, in my opinion. I know when I was looking for cars, 10, 15 years ago, models looked different, right? There were some big changes year after year, but I think there's small changes now, and every car looks virtually the same. And if that sounds familiar to another company, it's because it is, and that's Apple. I think we see Apple in this arena now, small yearly changes, and the iPhone looks the same every year. What we need is a Tesla to come along in the phone industry and either push Apple to become exciting again or create a new legit option. This is how innovation occurs, and this is why I think Apple is in a pivotal moment to either get buyers excited again or leave a void open for some newcomer to have an opportunity at changing the industry. The one thing Apple has going for them is they have a pretty built out ecosystem, but again, never say never. So how do I see this merger affecting the auto industry? I think it will most likely be a positive move to push innovation further, both on these three car companies that are planning on merging, as well as Tesla's end, as well as other major car players too. Competition is the antidote to lack of progress and improvement. If a company feels they're at the top and have no competition, they will likely just go with the status quo. But if there's competition, they will be investing into growth, innovation, and change because they do not want anyone eating at their market share. They want to expand that market share. This is what we want as investors. Both a company with a wide moat, but also some competition to keep it growing, keep our investments growing. So if you're a Tesla investor, I would see this as a good thing. If you believe this will only push Elon and the entire management team to move, change, and innovate at a faster rate to stay on top, then welcome this. If you feel that they won't be able to accelerate the progression of innovation and production faster, which could allow others to catch up, then you need to reconsider your investment. It's also good to have the Chinese EV market have some competition as well. That does help Tesla too. The future is something we cannot predict. That's why we have to continuously analyze the companies we invest in to determine if we keep and buy shares or sell our shares. So this is exciting news, and we will see if it goes through, and then just how successful the newly merged holding company can be at growing their market share. Now let's look at Nissan stock. It really rocketed up since this news, 54%. And you'll see, I'm going to show Honda and Mitsubishi. This one popped the most because Nissan is already in a decent, stable position, and it's going to benefit massively from this merger. But if we look at Honda, of course, it popped 20%, not the 50-some percent that Nissan did. But Honda's already struggling, so I think a lot of investors are not as bullish as they are on Nissan with this merger. And then if we move to Mitsubishi, you'll see no pop in the stock. Why? Because they haven't officially announced that they'll be joining this merger. But once they do, I expect the same result. Now, I personally would not invest in Nissan, Honda, or Mitsubishi at this point because there is a chance this merger does not occur and that the merger would prove successful. We just don't know that. They're already struggling, so they have an uphill battle, and I don't put my money into deteriorating companies that have not proved anything yet. Their approach could not work against the giants they are facing that already have a clear and growing lead. Time is of the essence here, so let's see what they do with it. Now I want to show you my portfolio and its performance. You'll notice it looks very different. I kind of recreated this to look like a dark mode, and I think it looks very cool, better than the old portfolio style I had. So let me know if you like this or not. And let's just take a brief look at my portfolio. My growth overall is just shy of 33%. I don't have any automotive players because I don't think that's a good industry to invest in. It's just very volatile, a lot of high capex. And, to me, you're betting on popularity. I just don't like that. They don't have wide moats, built out ecosystems like these companies I invest in. And these companies, they are companies that have wide moats and that are being pushed by competition, right? I'd say the only ones that aren't are maybe Union Pacific because there's no newcomers to that game. So this is like my sturdy pick. And then I'll say with my REITs, Vici, I would say, is exciting. It's innovative because of the properties it invests in, right? Experiential properties where realty income, they're not pushing the innovation envelope in any way in the properties that they're renting out to and leasing to. So this is one that is kind of my weaker link right now. I'm considering maybe selling in the future. We'll see. But I also want to add some companies in here that are of quality, have those wide moats, and that are being pushed by competition to become better and better. And that gives me the confidence that in the future, they'll be a bigger, better company than they are today. That's what you want to look for. So let me know your thoughts on this merger. And if you feel any pressure as an investor in Tesla, I know a lot of you invest in Tesla out there. It's not one I'm invested in. I still think they have a lot to prove. And I'm just not willing to put my money in at this point with how high the valuation is. And with the future that, it's still far out what they're doing. It's just not for me at this point. But for you, if you're investing in Tesla, do you see this as a good thing, this merger of these three companies like I do, or do you think it's going to put pressure on Tesla and cause some troubles for them? Now remember, this is a point to just really put this in your head and stick it there. Keep up with the companies you invest in. Don't become complacent. If that's hard for you, then just choose some ETFs, some S&P 500 ETFs maybe. I have two in my portfolio you saw there. SCHG, which is the growth that follows the S&P 500, and SCHD, which is a dividend growth ETF. I think those are two great ones to pair with each other. And there's nothing wrong with investing in ETFs. You can still become wealthy that way. Now be sure to subscribe to join this investing family. Happy investing, and we'll see you soon on Mark Arnold's Finance.